Hello, everyone. My name is Alanna Shuh. I'm a market strategy director focused on the Canadian market for LexisNexis Risk Solutions, and I'm excited to moderate a timely discussion on the impacts of moving towards instant payments with our experts today. Before we begin, I'm going to briefly introduce our panelists. Today, we have Ed Metzger, who's the Vice President of Platforms and Payments at LexisNexis Risk Solutions. Ed has progressed through a variety of roles over the last 20 years during his time with Banco Santander, Barclays, and Accenture. His most recent roles prior to LexisNexis Risk Solutions involved the creation and scale-up of two payment-focused fintechs funded by Santander. His career has been mainly spent in Europe, such as London, Madrid, and Paris, with extensive time recently spent in Latin America. Kim Sutherland is the Vice President of Fraud and Identity Strategy at LexisNexis Risk Solutions. Kim leads the Americas commercial strategy for consumer fraud analytics, identity verification, and authentication, as well as fraud investigations. With over 20 years of experience leading business strategy and product management, Kim's responsibilities have spanned from building global professional services practices to developing cross-industry best practices and technical standards. And Cynthia Printer serves as Director of Market Planning for Financial Crime Compliance and Payment Solutions for LexisNexis Risk Solutions. Prior to joining the company in January 2021, as a result of the LexisNexis Risk Solutions merger with Acuity, Printer served for 15 years in a variety of roles at Acuity, most notably as Head of Market Planning, Senior Director of Strategy, and Vice President of Client Operations. Previously, Printer worked for KPMG as an internal auditor specializing in real estate. So before we jump off the discussion, I also want to share a little bit about LexisNexis Risk Solutions in case you're not familiar. So LexisNexis Risk Solutions is the trusted data and analytics provider for organizations seeking actionable insights to manage risks, find opportunities, and improve results. We leverage our industry-leading big data computing platform with vast data assets, proprietary advanced linking technology, and sophisticated analytics to drive decision intelligence for our customers. We're a global company with over 10,000 employees, serving more than 200 customers in over 180 countries, including many countries that have made the transition to instant payments. All right, so let's get started. Ed, you've worked in several countries, some of which have made the transition to offering instant payments. What are some of the changes that you've observed when an instant payment system launches in a country?
Thanks, Alanna. Well, first of all, great to be here today, and a very timely topic, especially in the Canadian context. You're quite right. Yeah, I've been through, in my working career, a number of cycles of implementing and developing real-time payment systems. Starting in 2008 when I worked on the implementation of fast payments in the UK, and then in a separate instant in Europe recently. And then, as you mentioned, I spent 9 months out in Brazil working on PIX in the context of the Santander Group in my previous role. So what have I seen, and what do we learn from other real-time payment systems implemented around the world? So I think there's a direct impact, and then there's the, I think, more consequential indirect impact. So obviously the direct impacts in terms of financial institutions is you have to implement a new clearing system. You have to settle in a different way. There's a big operational impact, and then you have to layer onto that all of the compliance with the scheme rules. And then in addition, thinking forward, how do you control your customers' fraud exposure? How do you control your fraud risk exposure? And that's a kind of direct impact. How do I make this work? How do I make it happen? But I think the more interesting ones are actually the indirect consequences, and those are the change in consumer behavior and the change in the behavior of those who do not have your consumer's interest at heart. So what normally happens is, in terms of a consumer behavior change, is a couple of things. One is the volume of payments starts to increase. As people see that they can make instant payments, they no longer have to wait a weekend or overnight for the payment to arrive, account-to-account payment suddenly becomes the mode of choice to transfer money between individuals and companies, and between companies. And so that volume, and we saw it in the UK in faster payments, and that volume increases. And what's happened is recently with Brazil, with PIX, and India with UPI, is that increase has just been astronomical, because it's not just replacing other clearing schemes, as in the case of the UK, it's also replacing cash in other markets. So markets where cash is important, suddenly the instant clearing scheme replaces cash. So that's one, volume. And then ticket size tends to decrease. Average ticket size tends to decrease. Why is that? Well, because people learn that you can do just-in-time payments rather than funding a corporate account with all the money you need to pay out wages and suppliers for the whole month. You just ping money as and when it's required, and people start to do that instead of saving positions to be settled jointly. They start pinging money, and you'll see that, when you go out for dinner with anyone in Brazil, they'll just ping each other money straight away. One person will settle a bill, and everyone else will settle pinging each other money over PIX. And then the third consequence is that account-to-account payment ceases to be just a means of paying between companies and people. It moves into the B2C and C2B worlds. And so, one of the best illustration I can give of this is when I spent my time out in Sao Paulo. You go to the park there, the equivalent of Central Park, and when you go to buy a coconut, very refreshing on a hot day, the coconut seller accepts cash or PIX. There's no cards, and in fact they prefer PIX because it's in their bank account. They don't have to have money on their on their cart. And that to me is an illustration of what I saw everywhere in Brazil, and I see now more and more in Europe, and especially in Asia as well, where there's many instant payment schemes. Is it becomes the standard for paying, or it becomes a competitor to cards, and in some places, in some contexts, can overtake cards as being the way of paying for goods in a shop or online. So I think for me that there's the direct consequences, which is the ones everyone focuses on initially. But I think the more interesting long-term ones are those indirect consequences for consumer behavior. And then lastly, I want to also mention another consequence, which is not so happy, which is there's an explosion in fraud, not just in numbers, but in the use cases. So how fraud is committed, what the fraudster's trying to do, what are they trying to engineer the consumer or the entity. As lucky today, we've got Kim to talk us through that. But that ecosystem, the change from going from next day payment delivery or payment delivery in 3 days' time to instant, really changes the calculus and makes fraud prevention a top priority for thinking about an ecosystem where you have instant payments.
Thank you, Ed. And you really did tee up Kim so well there. So Kim, following on what Ed just mentioned in terms of some of the different changes in terms of consumer behavior, how do fraudster behaviors change as well with the introduction of instant payments?
Well, in all situations, I think that fraudsters adjust their behavior to whatever is facing them in the easiest way to compromise a situation. And so for instant payments, the two most important things are that the speed of the transaction, as Ed has talked about, it's an instantaneous, faster, much faster than what they're accustomed to, and the irrevocability of the transaction. And so fraudsters love that part. So fraudsters can be on either side. They can be on the receiving end, but they also can do account takeovers and be on the sending end. And they can take advantage of both of those aspects. So I think that the biggest issue around instant payments and fraud, when we talk about the fraudster themselves, is really just the way that they can strike quickly, and there's no ability to revoke that payment in the same way. It's a very different situation when we talk about the consumer. I think a lot of confusion exists from the consumer side of things because they are in a hybrid environment in many early rollouts. So that some of their transactions are instant payments, and some of their transactions are more the traditional model. And having to educate consumers on when they are in the midst of an instant payment is a challenging area for financial institutions, especially to help the consumer learn the difference. Because again, they have very little opportunity to make an adjustment. The good news is that we've had several years where people have gotten accustomed to peer-to-peer payments. And that's probably the closest experience that a lot of consumers run into. And so I think they've gotten more accustomed to questioning, asking more investigation around, are they really sending to the right individual? Have they made a mistake on their side at all? Because they understand that once it's gone, they can't pull it back.
Absolutely. And Cindy, what's your perspective on some of the different changes that occur with instant payments?
Yeah, absolutely. Thanks, Alanna. You heard Ed and Kim briefly mention, we know instant payments is, they're fast. So they're allowing fraudsters to also move quicker and take advantage of this larger scale. And so fraudsters' attitude now is just go bigger. Why commit a fraud, payment transaction fraud one by one, when now they can go in and take over an entire account, as Kim mentioned. And so we're seeing those behaviors change, and we'll get into a little bit later on the organization side, but that's something that you as an entity can be monitoring, is that when you're seeing these large payment volumes being transacted, as Ed mentioned, one of the real benefits of instant payments is moving small money instantly exactly when you need it. So we've seen the size of those transactions be a little bit lower, but when you start to see larger dollar values being moved, that can mean, doesn't always mean, but it, you benchmark behaviors, it can mean that there's fraud occurring. And especially now when technology is so advanced and fraudsters are able to, they're in doing any of this under their own identity. They're creating a stolen identity, making up an entirely new identity. So instant payments, if they're happening quicker, they're happening at larger volumes when fraud is involved. And because you're not noticing that, because of the instant nature of the payment, by the time it is noticed, the fact that a fraudster has used fraudulent, a stolen identity, or just a completely made up identity, the trail, unfortunately, back to them isn't there. And as Kim mentioned, these funds are not helpful. So I would say one of the largest behavior changes is the size, the volume of the money involved in those transfers can indicate a fraudulent activity.
Absolutely. So Ed, several other jurisdictions have made the transition to instant payments as mentioned. So of the different countries that have transitioned, such as PIGS in Brazil, what would you consider to be definers of success in introducing instant payments?
Yeah, so I think, well, there's a different ways of looking at this, right? But in terms of just as an ecosystem, the ones that really stand out are PIX in Brazil and UPI in India, where they have, I would absolutely say they are a revolution in how the financial system works in those countries and how the population relates to each other in terms of moving money. Now, actually, obviously in the US, FedNow was launched last year, so we may see some, that might be another big success. I think there's been some slower burns, to be honest, in I think Europe and with SEPA Instant and the UK with faster payments. Now, that's not to say they have not become the instant payments has not become the default way of making payments. It just hasn't had that enormous game-changing impact that we've seen in such short periods of time in India and Brazil. So what do they do differently in those countries? So one is I think a very strong element of compulsion to get everyone on the network straight away in terms of financial entities. Why is that important? You get the network effect. If it's a voluntary process, typically that adoption curve is much slower, and that's because no one wants to go first as the sender, because there's no one to receive and give you the benefit back. And so that degree of compulsion just pushes that ecosystem much further. Second is the economics, right? So I think the economics is really important, which is that it should be to make usage common. Obviously, the price point is really important, and that's a challenge often, and it's a challenge for financial institutions because obviously, if you make something free, it tends to be used more. But someone has to pay, right? Someone has to pay for the infrastructure. Someone has to pay for all of those difficult topics that Kim and Cindy have been talking about, right? Which is how you defend, as an institution, you have to invest money in defending your customers and your own bottom line from fraudsters. But there's an element there about thinking through the economics. And then lastly, it's, I think, the use case. So if we're just thinking of it as a clearing network, then there's, like I said, there's diversion of traffic from other clearing systems to the instant one, and there's a growth in the digitization of cash transactions. But the one that really makes a big difference, I think, is that really changes the model is where you think about different use cases, like can you pay in a shop with instant payments? And we see that in Asia, right, where a lot of these QR codes, they tend to be walled gardens, but they've really, again, revolutionized the way people pay. So I think those are the key characteristics. And then lastly, I think there's in terms of that use case, and Cindy touched on this, when faster payments started in the UK, the limit was very low for the individual payments, incredibly low. And so obviously it's had its appeal to a certain type of customer, a certain type of use case, certain type of transaction. What really makes a difference, especially for company payments, is when you increase that limit. And now, many countries in the UK, I believe the limits is over £1 million for an individual transaction. And you see that around the world. And that increase in value, it's not that it drives the volume, it just drives the number of use cases. If you're a company paying your suppliers, it's unlikely you're going to be paying them only $1,000. You're going to be paying them $20,000, $30,000, $50,000. And so increasing the limit on the value is very important. But that in turn, going back to what Cindy and Kim were talking about, makes that challenge on the fraud incredibly big, which is how do you handle that risk? And I think, to make a new instant payment system work, that rapid transition to very high value caps is essential, but that means really thinking through how you stop the fraud, but stop the fraud in a way that does not compromise the customer experience, because that's the other barrier that we can sometimes see, is where you have to validate things 5 times as a consumer. It's actually quite a big barrier. So that the right balance of customer experience, where we protect ourselves as institutions and our customers, but having the right experience, that needs to apply at low value transaction levels, and then to some extent at higher value transaction levels as well.
Makes a lot of sense. Cindy, I'd love to get your perspective as well. For those countries that have transitioned to instant payments, what would you consider to be definers of success?
Maintaining a very robust financial crime compliance program is of utmost importance. So, and what that involves, knowing, seeing maybe sister regions having adopted the instant payment methodology, every entity, every organization and regions as a whole can learn from that. Some of these aspects that Ed touched upon with the positives and some of the roadblocks. If a particular region is maybe a later adopter of instant payments, they can learn from some of the other, or they can adopt some of the learnings that some of the other regions that were earlier adopters ran into. So, for example, in European Union, as Ed touched on, adoption did run slower. And as a result of that, or the reason for it, is because there were some roadblocks. And so it was almost 6.5 years from the time of the initial regulation coming out from the Single Euro Payments Area, or SEPA, that governed instant payments in their 36 member countries, whereby adoption was so slow. We fast forward to now Q1 of 2024. What SEPA realized was adoption hasn't picked up the way PICS had, and Ed went into a couple of regions there where instant payments adoption was very, very rapid. European Union didn't experience that. And one of those was because there was a roadblock, if we think specific to financial crimes compliance, whereby there is a requirement to screen a payment transaction against economic sanctions lists, unlike the Canadian sanctions list, or in the European Union, their consolidated list of economic sanction. There's a requirement to screen that payment transaction before it goes, when it's being initiated. And so while there are screening solutions that are real time, so that falls into the definition of instant payment, it's nearly impossible to remediate a hit that has been screened, payment transaction screened against an economic sanctions list. It's nearly impossible to remediate that hit in less than 10 seconds. And so, full circle, this is what the EU was seeing and experiencing. Why they were having low adoption is they just couldn't fit their model into that definition of instant payments. And so now what the amended rules have brought out earlier in this year, and they're going to go into effect early in 2025 to remove those roadblocks, and specifically only in the case of instant payments to reduce that requirement. It's a waiver, they're calling it, to waive that requirement of screening that instant payment when it's, at the time of initiation. Instead, they're adding, intensifying the requirement further upstream in the process to screen the entire account base against the EU's sanctions list on every 24 hours. So within a 24-hour period, the account base now must be, like your customer and your vendor base of an entity, must be screened against the EU's asset basis list every 24 hours. So by doing that and screening the account base as a whole more frequently, doing that within every 24 hours, regardless if the list has changed or not, now you're maintaining compliance against EU sanctions. Further, maintaining the compliance, doing it further upstream, we're not up against time crunch. So now the payment transaction doesn't need the screening, and that can go through and fit into the 10 seconds or less, that definition of instant payment. So the EU is really hoping that the adoption will increase while still providing that very safe, efficient, and fast way of moving a payment between individuals, organizations, and really just all businesses in the EU.
That is so fascinating, and it's so interesting to hear about how not small, but how different components can really impact the complete success of an entire program. So I'm so interested to see how the waiver and how these rules change impact the uptake of instant payments in the EU. So interesting. And I think that this also really helps to tee up an important conversation around that balance between customer experience as well as making sure that we are ensuring a safe experience for consumers and our businesses. So let's move forward and start talking more about protecting your customers and organizations as Canada works towards launching real-time rail. So Kim, we've talked quite a bit about successes associated with instant payments, as well as the prospect of fraud. What should organizations be aware of or pay attention to from a fraud prevention standpoint?
So, these questions actually go very well together because one of the biggest indicators of success is adoption. And I think that the latest stats are showing that by 2027, 30% of all electronic payments globally are going to be real-time payments. So when we look at it from that standpoint, adoption is growing about 20% each year at least. And that means that the consumers, the businesses that are using these types of payments are really seeing the benefits of being able to have these faster ways to make their payments. When we look at trying to increase adoption, you've got to address the friction concerns. There's not a lot of friction that can happen though in 10 seconds or less. So that means that you're going to have a lot more risk. And I really like the fact that how Cindy pointed out that a lot of pre-work has to happen for the EU to have been able to follow through with their very detailed processes. They had to do things to try to do things in advance. So pre-screening of customer bases is really important. Being able to know as much as you can from a network perspective around the devices that are being used, the digital footprints of the individuals that are making these electronic payments. So for example, their email addresses, things that can be done in sub-seconds are really important. Things that are low friction are going to be really important. So I think that really lends itself to the understanding of the digital aspects of the payor and payee in that process. The great news is that there are so many solutions out there now that can help with not just understanding if the device or the email address or the phone number to which that payment is maybe being associated with is risky. We also can look at some of the behavioral aspects of how someone is even interacting with the device, because I think we have two things to worry about. Is the actual recipient a human, which sounds kind of strange, but we do need to look at human versus non-human, so bots and other types of ways to kind of mask that identity. Are we able to address that concern? And then Cindy brought up much earlier in the conversation this concept of made-up identities. We usually refer to that as synthetic identity fraud. And from a fraud standpoint, that is something that has global impact now. In the US, where I'm located, we see a lot of focus on synthetic identity fraud. For probably the last 10 years, it wasn't that high of a focus internationally. Now we're seeing that over 50% of businesses in almost every country are saying that they're seeing an increase in this concept of a made-up identity, synthetic identity fraud. And that could be, unfortunately, the payor or the payee in an instant payment scheme. So we just need to be very careful from those standpoints. The last thing I point out is that this merger between trying to have a safe instant payment and the high increase in scam activity that is being reported, again, globally, those two things are very coordinated. So fraudsters are really trying to do much more fraud ring-centered activities, things that really play from a social engineering standpoint to make people hit that send button faster than they need to. Because again, when we go back to the fact that instant payments are, you can't revoke them, that whole area around scam activity is really going to be a real challenge. The point that Ed made earlier around having a risk-based approach is probably the best way to be able to keep those adoption rates high, continue to grow adoption of instant payments. Again, we know that it is a very beneficial, convenient approach for making electronic payments. But to do it safely, it needs to be risk-based so that you're not trying to put too much friction in every process. But as that dollar amount increases or as a new user, whether it be a consumer or a business, is interacting, that's probably when you need to have more interrogation of, is that going to be a safe transaction?
That makes a lot of sense. And I think that it is so interesting to think not just on the person who's paying, but also the receiver. That's such an interesting viewpoint. And I also really appreciated your comment around scams, because one, that is such a popular vector right now, but also I think that some of these fraudsters are realizing that the biggest vulnerability in an organization's process is sometimes that end consumer, and they're very skilled at really tugging at the heartstrings or trying to make a case to act quickly. So that's such a great point.
Consumer or employee, right? So I think both sides, the things, it's not just on the consumer, when scam activity can happen on both sides.
That's a fantastic point. Cindy, you were just mentioning compliance in the EU and talking about the compliance framework from an overarching perspective. But while there are frameworks in place, how should organizations consider compliance as it relates to instant payments?
So at the most basic level, organizations should just constantly be looking at evaluating their existing financial crime compliance programs and the processes that make that up. So instant payments in particular, we've talked about, introduce some new challenges. They introduce and highlight some weaknesses in a program, in the processes that support that program. So that's one thing I say to every organization. It's like, what are the things I can be doing? Well, all the time, instant payments or not, keep annual, if not more, evaluation of your program to ensure that you are staying on top of all of your options for the various processes that you can introduce. But in the case of instant payments in particular, a very effective process to introduce is this idea of transaction monitoring. So introducing a monitoring process that works from the front of the workflow to the end of the workflow. And what it does is it serves as an ongoing view of your customer base, your vendor base, anyone you're making a payment to. You're staying on top of their activity, their behaviors. It's really about monitoring behaviors of your ecosystem. And once you have a customer base, you have a vendor base, you've established a benchmark, then this transaction monitoring of everything that's going on in your ecosystem, how customers and vendors are behaving in your own ecosystem, is compared to that benchmark. And it very much immediately then highlights any suspicious activity. And by doing that on an ongoing basis, then even if a nefarious activity has taken place by a fraudster, you're catching that right away. And you're able to prevent further damage from being done. And then in the case of instant payments, that monitoring, again, is this concept of doing more things upstream. So that, as Kim mentioned, that word friction, removing that friction from at the time of payment transaction. And so you can support the concept of instant payments, then also catching things further upstream is then limiting the damage or the impact to your organization. And moving to a real-time transaction program, some organizations still real-time screening against those economic sanctions lists, still screen and batch. Real-time, you've got to align the timing of many of your other processes to align with supporting that immediacy of instant payments. So moving toward a real-time sanctions screening program is really important and something that an organization should do. And then lastly, I would say one of these simple things that it does require effort, but it's simple in the sense that it sits outside of maybe a technology workflow of a financial crime compliance program, and just keeping up on educating your compliance professionals in your organization, maintaining regular education sessions that are both talking about instant payment programs in other regions, comparing those to an instant payment program in your own region or one that may be introduced soon in the case of Canada, just keep maintaining that on an ongoing basis with your compliance professionals is extremely, extremely effective. Then you're aligning how your employees think, how your professionals think, and how that compares to your internal processes. And it's creating that alignment for you.
That makes a lot of sense. And it's such a great message to, have those regular check-ins on your program to make sure that it's as robust as possible and that it's really meeting the needs of your organization and how the environment is also shifting. So in our conversation today, we've really focused on instant payment systems, and that focus has mainly been more domestic systems. But let's also talk about what happens when instant payments goes international. So Ed, we've talked about these instant payment systems and the impact domestically. Can you share about projects that are designed for interoperability between systems?
Yes, I think there's some really interesting developments because it's the next, if you think about what's the next frontier for the payments industry, it's how to change that international payments experience, right? So international payments traditionally have been the ones that take, maybe 5 days, they take a long time, they cost a lot. You don't have a great traceability. So there's been various attempts across the industry to do something about that. Swift Go, which is the low value instant network launched by Swift, was one attempt. And now we see Nexus by the Bank of International Settlements. But I also want to talk about others, right? So the reality is, especially in some markets, people may have heard of a Revolut or a Wise, and what they are effectively doing, they all started as international payment methods where we're using pre-funded accounts and a sort of a network they were running themselves. They were able to increase the speed and often get to a phase of what appeared to be instant international payments using two domestic schemes as the prop. But I think all of those things, there's no answer today. Most international payments, the vast majority, will still use traditional methods and will take a length of time. But I think what they illustrate is there's real customer demand for something that is faster internationally. So what does that mean? I mean, I think when you move away from the domestic to the international, whatever shape that takes, I think the challenge is even bigger because at least in your domestic world, you'll know more about that ecosystem, the population, you'll have a far richer source of data internally. When you have your customers moving money internationally, that's very challenging. It's a very challenging environment to control the fraud. So as well as all of the elements that Kim and Cindy have been talking about, it's really making sure what tools can you give your customer to identify, are they sending it to the right place? And that, I think, is one of the challenges when you move outside of your country is just how you get that data. So the industry and ourselves are focused very much on that concept of confirmation of pay, confirmation of destination, and any indicators that help control that risk. In terms of timelines for when we'll see, the rise of international instant payments, I think it's going to take longer. Regulators within their domestic worlds can move much faster and with much clearer direction. But like I said, there's demand out there. It's happening anyway, and we can expect that. Now, the last thing to say here is just as an anticipation, if we, as an industry, we're able to control fraud in the domestic sphere to a greater extent, what do fraudsters do? They always go on to where do I go next, right? So when we launched faster payments in the UK, we saw that the industry as a whole moved very much to one-time passcodes, and then that was compromised by a man in the middle of attacks. And there's always the next frontier, right? And so I think one of the things we should think about as an industry is if we can control domestic risk coming from instant payments, that Canada would be an interesting one, and FedNow started off, I think, quite strongly in that respect. Well, the fraudsters will probably start targeting instant international payment mechanisms sooner rather than later. So getting ahead of the game is really important, because when you lose money domestically via instant payments, as Kim said, you can't revoke that payment, but at least there's a common legal framework to try and get it back. But if it leaves your country, it's very hard to get it back indeed. So I think getting ahead of that curve and thinking about how do I control my international risk is really important as well.
Absolutely. No, that's so fascinating. So for everyone on the call today, so as organizations to seek to protect their customers and their organization, as a wrap up, are there any tactics, techniques, or tools that can help maximize the customer experience?
So I'd love to chime in here. I mean, first, just kind of building off of the international conversation. I think that a lot of countries, have created regulations around how their data cannot leave certain geographies. When you think about fraud signals, it's not necessarily the same as data, because it is critical that it leaves geographies, because fraudsters don't stay in one geography. So we've started to see institutions keep lists of known bad individuals, devices, accounts, but that information needs to have some safe way of being able to share across institutions and across geographies as cross-border payments continue to grow. So I think that the whole concept of a shared network, broader than your own institution and broader than your own region, makes a significant impact in trying to protect against fraud. The one thing that's, the way that you try to address fraud in instant payments is not much different than addressing fraud in any type of payment or financial transaction. And that is really a multi-layered approach. So in Ed's example, that one-time passwords were being compromised in a certain area, if you actually had layered that with the risk of the phone number or the device or the email address, however that one-time password was being sent, it might have had a different perspective on if it was safe or not. So layering the information that the risk signals, makes a huge difference in addressing instant payments, knowing everything from the physical aspect of the identity that you can understand, and that digital aspect and the behavioral use of how they're interacting with the device. So I just think layered is the key to being able to address this.
Absolutely. That makes a lot of sense. And I think that it is also, as things become faster and more convenient and people can do things online, it's so important to maintain that balance of customer experience, but also protecting the consumer, protecting your own organization, and then doing that all with the, how do we best protect people's information, but in a way that's not going to introduce opportunities for fraudsters, because they are unfortunately trying to get access to people's accounts, to their information. So that is such an important point. And layering solutions to get that 360-degree view. Again, I think that's such a fantastic point, because you really do need to know who you are interacting with, and fraudsters have become very adept at trying to navigate some of the solutions that are available today. So having that layer can just make sure that if somebody gets past one step, they're not going to get to the actual account. They're not going to be able to act on behalf of that consumer. Cynthia or Ed, any tools or techniques that you would advocate for in terms of maximizing the customer experience?
So, I mean, I think what I would say is I'd absolutely second what you've just said and what Kim has said. So, like, the best fraud prevention is a fraud prevention the customer almost doesn't see, right? Which is using data, technology, consortiums to really understand how risky is this transaction, because those scams that we talked about, I mean, you read some of the stories, it's just incredible how sophisticated they are. And I think defending customers using data technology and background processes is the best. But I think just in the context of Canada, I guess what I'd like to say is, moving into a world of instant payments, it's been done before, right? So it's been done before. There's lots of experience. I mean, just from the call today, the accumulated level of experience in how it's happened before and what the problems have been, what the opportunities have been. I think that the key is making sure that as an industry and as in institutions, you look outwards, because like I say, it's the trend you'll see in one country is going to be repeated here. The lessons that have been seen in one jurisdiction will be seen in Canada. So I think that learning from the outside world is really important. That's, as an industry, I'd just say, get out there, talk to people, talk to us. There's lots of experience there that can help balance customer experience and safety for your customers and for yourselves.
And Alanna, I'll just add, coming back to that concept of a risk-based approach, this is where it's really important. Cross-border transactions, instant payment cross-border transactions, they all add to the risk. And so while there are minimums of processes that each region has in place according to their anti-money laundering regulations or counter financing of terrorism regulations, coming back to that concept, it's a minimum. So as the risks are introduced, it's important for an organization to be able to flex and have that as their process, that some types of transactions will take flexing and alteration on. For example, it's an instant payment, it's a cross-border instant payment. So let's up the due diligence, the know your customer, the know your customer's customer, perform even more enhanced due diligence processes. And so an organization keeps themselves nimble. They do that overtly. They do it purposefully, using that risk-based approach. There are practices out there, in the world of protecting yourself from financial crimes that entities can do, they can adopt to protect themselves.
Great point, Cindy. So thank you all for joining this conversation. I feel like we could talk even more on the transition to instant payments. It's such a fascinating topic. So thank you again. And I hope that everyone watching has a great Payments Canada Summit experience. If you're interested in discussing these topics more with our group, please feel free to reach out. And I hope that you have a great rest of your day. Thank you.